Well, I never saw so many people so bearish. And I think, as I mentioned, when everyone's on one side of the market's going to do the opposite thing. So much bearishness is built in that any crumb of good news, such as the inflation news that we've been getting, interpreted positively by the market, and of course the hope of a pivot by the Fed. Next week is critically important. We have to get no more than 25 basis points. 50 would be, I think, a disaster. We need to get 25, but we also need to get the messaging that not only does the Fed see that their policy is working, but that they are very near the end of their tightening, not, oh, we have more work to do. I don't think the market will take those words very well. I think 25 basis points is all they should do. After all, by the way, we got the December money supply, Scott, which is, as you know, something that I look at closely. 2022, the lowest growth of the money supply since the Great Depression of the 1930s. Now, that's something to think about. We have the greatest inversion of the Treasury yield curve in over 40 years, the most reliable single indicator of a recession. That's something to think about. Why would the Fed want to continue and even increase the inversion of the yield curve? That's beyond me.
All right. So there's a lot there, Professor. And you used a very interesting word. You used the word hope, about what the market hopes next week, about what you hope next week. And I remember the Shawshank Redemption, Professor, when they said hope's a dangerous thing. And that's what some people say now, that it's a false hope, okay? That it's a false hope because the Fed is more intent on making sure that inflation is not only down, but that it doesn't come back. And that this whole move predicated on this idea that the Fed is going to make a pivot or is near done is a false hope. How do you respond?
Well, if you shrink the money supply, inflation is not going to come back. You know, they talked about the stop and go policy of the 1970s. So really, in terms of money, they kept on pouring it on and on and on, and there was continued inflation. We have a completely different situation today. And as I pointed out, if you use current housing data, not the misleading housing data of the Bureau, which is averaged, to months and months into the past, you have negative inflation right now. So we have nothing like the 1970s. They should recognize how tight they have become so quickly that risked the economy in a recession. It's not a stop and go situation like the 1970s at all. So they don't, and they also have to recognize, and Chairman Powell says this himself, but then sometimes the way he talks, he doesn't seem like he understands it. Monetary policy works with lags. All that tightening, a lot of it is yet to be felt. You're in real negative territory for inflation. You do see a slowing of the real economy. I mean, GDP was up, but the composition was not particularly good. The only thing is the labor market that's still tight. That's the only thing. And as we pointed out, that's the worker trying to catch up to all the purchasing power that he and she lost over the last 2.5 years.